All right, thank you for staying with us. The Central Bank of Nigeria in November 2015 kicked off the Anchor Borrowers Program to help farmers access finance easily in a bid to boost local production. But the inability to recover the loans from the defaulting farmers is said to be posing a threat to the scheme. The Anchor Borrowers Program was created to serve as economic linkages between smallholder farmers and reputable companies involved in the production and processing of key agricultural commodities, with the aim of boosting agricultural production, create jobs, reduce food import bills towards conservation of foreign exchange and, of course, reserves. Since the inception of the scheme, the Apex Bank maintains that over 3 million farmers have benefited from the 791 billion naira disbursed, while 77.18 billion naira loans have been repaid by the farmers as at December 8, 2021. Well, he's live in the studio. Let's understand what this means for the agricultural sector. And of course, for those that might want to even get a share of the Anchor Borrowers funds, that's from the Central Bank of Nigeria. I have live in the studio an investment analyst is with Afri Invest Assets Management Limited, Mr. Temitope Omoshwi. Thank you so much for your time. It's good to have you in the studio.
Thank you for having me.
Yes, I am worried. Like the statement of the Central Bank, this is the way, and I quote, the farmers are seeing these loans as national cake and they don't want to repay. It's a loan. So why are they not paying back? What do you think is responsible for this?
Well, before I go into that, it's actually very disturbing to know that such is happening at this particular time where the agricultural sector needs to be at its best. Because if you look at what is happening globally, right, we've seen significant shocks in recent times. In the last 5 years, it has been very, very consequential. From 2016, oil price decline. 2 years after 2018, we saw US-China trade war that affected global economy. 2 years after, again, 2020, another pandemic. 2022, we are here again talking about Russia and Ukraine crisis. So maybe in the next 2 years or 3 years, we should expect something more, which speaks to the fact that every economy has to be resilient in terms of self-sufficiency, especially in food production, right? That is, they have to prioritize food security. So no wonder the CBN went, in 2015, even as far as, using the Anchor Borrowers Program to advance credit to the agricultural sector, right? But the reasons are not far-fetched, actually, because if you look at what happened to foreign reserves before 2015, from 2013, foreign reserves was about an average of $42 billion, went down to 39 in 2014, further down to 29 in 2015, and it even went to as low as an average of $26 billion in 2016 as a result of the economic recession and the oil price shock. So that actually led to the program, because the CBN needed to shore up reserves, and the food importation accounted for significant portion of import bills. So it's battered, it battered the program, but because of the nature of the agriculture sector, Nigeria agriculture sector, is largely informal. It's largely informal, and most of those farmers cannot even get credit from the traditional bank. The commercial banks will not want to give them a facility, and due to about some factors that I think are very important, which is called the 5 C's of credit. So because of these 5 C's of credit, they can actually get, some of these will be waived by the central bank, because, the Monetary Policy Authority objective is to ensure price stability. So at all costs, the CBN will want to ensure that price stability is achieved. And you and I know that food inflation is the major driver of, CPI, headline inflation in Nigeria. So they are doing as much as possible. They want to relax some of those conditions for credit worthiness. The 5 C's are, talks about collateral. Most of these farmers don't have collateral, so they can't get money from the bank. So they would rather, use the program of the central bank. The other one has to do with the character. Character is one of the 5 C's. Character has to do with the historical, credit, condition of the farmer. Some of them don't even have history. So that, in a way, it has increased the susceptibility of these farmers defaulting on the obligation. Another one has to do with the condition, right? The condition of what's the purpose, right? Some of them don't even have a purpose, so to say. They just, because you already said that they saw it as national cake. make. So in fact, in fact, another point is this: one of the C is capital, right? The quantum of money they need and capacity to pay. Some of them don't even have capacity to pay. So these 5 C's will be carefully assessed by a commercial bank. So at the end of the day, banks will not give an average farmers money, but they will be able to get it from the bank, because the CBN will want to, at all costs, despite the fact that they are not able to mark these 5 C's, they want to just ensure that price stability is ensured. They will advance money to farmers, but they will also fail the test. Those farmers will fail some of these tests. So it's not the fault of the CBN, it's just the farmers that are actually, not performing as expected, and it leads to 2 major problems. 2 major problems that is a fallout of what we are seeing, what we call moral hazard and adverse selection. Because if you don't analyze the farmers very well, there will be problem of moral hazard. So it has to do with, when one party in an agreement has information that the other, the farmer already knows that this money, I'm not going to use it for farm. Right? I'm not going to use it for farm, but they will still take those money and use it for something else. So that is a problem in that regard. And adverse selection as well, when there's asymmetric information, the CBN is not able to get complete information. Why? Because of the 5 C's I said from the outset. Because they need to just advance credit, because commercial banks are not doing it due to the fact that those farmers are not able to check those credit worthiness condition. So, which is why we are seeing, some of these things happening around. And you and I know that the agriculture sector is largely, like I said, is largely informal, and we have a number of graduates that don't want to go into that space. The knowledgeable people in our society, most don't want to go into the agriculture sector. So you should just expect and know that, yes, this kind of trend will definitely continue. And it's very sad because, when you talk about money, money is not the real value. The value is the goods and services that are produced, which means for every naira advanced by the CBN to farmer, they are expected to produce goods that are equivalent so as not to drive inflation. So what does it mean? If CBN has given trillions of naira to farmer, they are expected to increase productivity, but productivity is not increased, but money circulation is increased. What happens? You have so much money, very little productivity, so inflation will continue. Inflation will continue because we are not getting those equivalent increase in productivity. So I think that's a problem.
Let's take it a bit further. Look at Nigerian import and export of agricultural goods. We have some graphics to show that from 2016 to 2021, it's been on the upside. So that means that with all of these efforts, we are not really achieving much.
Yeah, the number actually speaks, for itself. It's actually very interesting, or not so interesting, because it's quite sad. Economists believe that there's no problem with importation. In fact, when you talk about the idea of absolute advantage, comparative advantage by the popular,
on the screen now.
So when you talk about comparative advantage by the popular economic scholar David Ricardo, said you can actually import what you think you have relative advantage. That is, if you know that yes, you can produce it, cheaper, produce. If you cannot produce cheaper, import. But the problem is not just this is a problem. That is, the objective of the Anchor Borrowers program is to drive, drive export and reduce importation. But in the last, in those years from 2016 till 2020, we have seen over 200% increase in import. Same with export as well. But you see that the base is quite high. So that's why you see that import is still quite significant, but the pressure is even from the outcome of all this narrative, that is the inflation for food and imported food inflation. There wouldn't have been any problem if we are importing, right? We are importing the ones we cannot produce in terms of the comparative advantage, and we are producing optimally the ones we can produce. But it seems we are neither producing the ones we can import, nor producing the ones we have capacity to produce. So that's what we are seeing there. As a result of that, you will see food inflation. Currently, food inflation is, is significantly high. You are looking at, if you look at it, even before the Anchor borrowings came, that was between 2013 to 15, right? Food inflation on an average was just about 9%. Headline inflation was just about 18%. But from that period till date, food inflation has averaged 15%. Headline inflation is about 13%. So it's quite clear that, something is actually happening. The funding into that sector is not addressing the problem, or we are not seeing the impact. The numbers is beyond just sentiment. The numbers actually sincerely speaking, and if you also look at, the banking sector credit to agriculture sector, you will see that it has also increased, right? It has increased, although you will see that the share of agricultural sector in terms of, a banking sector credit is just about 5%, because banks are also very careful. They can't afford to jeopardize their non-performing loan. Asset quality, risk is very, very crucial. So that actually tells us one instructive point, that factors affecting the agricultural sector, right, is just beyond spending. We have infrastructure, we have insecurity, and all of those factors have continued to, impair the sector. So I understand why the CBN, has continued to support the sector, like I said, price stability concern, and we all know that a chunk of consumption spending in Nigeria, goes into food, and a chunk of our inflation basket is also food. So they are trying to do as much as possible, to bring down food prices so as to ensure price stability. But it seems the sector is not delivering the kind of result as expected, despite the fact that, according to the most recent report on employment by sector, it still account for close to 50%, of employment. So it's quite a challenge.
Great stuff, Mr. Temitope. Now, I'm also worried about, while reading through about the ban, we had some ban. No, it's an outright ban. There are restrictions for Forex. Some food like rice, margarine, fertilizer, dairy products, milk, and all of that. Many will say that before you implement such ban or such restrictions, you need to be self-sufficient. We are not. So this is part of the reasons why we are having this negative impact on our food inflation. What do you think? Because rice is one major thing. We know what's been happening with regards to rice and the prices are today. Do you think that restriction has helped in any way? And the border closures too. It's been opened now. Do you think this has any impact one way or the other on our food imports and all of that?
I think you're even going too far. If we don't impose sanction on ourselves, or if we don't put, if we had not closed the border, if I had not done all of those things, a best simulation of what will happen to us if we had placed restriction is what is currently happening globally, whereby India is saying that they are not exporting wheat again because they need to look at domestic sufficiency. Indonesia is not taking out palm oil because they have to cater to their citizens.
Yeah, it should be
so the first port of call, in fact, it has to be local productivity. Is extremely essential, because like I said, I mentioned that we've begun to see series of shocks in recent times, and it has been almost 2 years. So it tells us that the world economy is moving from what I'll call globalization to globalization. So globalization is where there's, an efficient global supply chain, but we are moving to where supply chains, is now there's a level of bottlenecks around supply chain as a result of, the crisis here and there. Countries are now focusing on their citizens first. So globalization is just saying that, globalization is slowing down. This is a big concern. So which is why, the agricultural sector has to be carefully considered, addressed, and all of those bottlenecks beyond just financing. I know financing, is one of the problems, but we have to look at other impediments, to this sector. We have to look at other impediments, other drawbacks to agriculture sector in Nigeria.
Let's wrap up identifying those other aspects. We need to adopt technology. You talked about youths not being interested. Many will say, you need to make agriculture attractive for me to come into it. We can't be doing the former hole and cutlass kind of farming and you expect anybody to want to come in. So what more can be done to, adopt technology, do things that can meet international standards?
So I think the first area we need to address, no nation in the world can survive without adequate security.
True.
So if we are still concerned about insecurity, I think people that are in the farm before, even before we have new ones joining them, they've left their farmland because of insecurity. So I think that has to be addressed, in addition to the fact that, there has to be research into how we can produce what we can, what can be, internationally competitive, because we want to look at beyond just local consumption. Although we have to also meet local consumption, but we also need to have to go into research and development into areas, you know, that will enhance our competitiveness. And in a way, we should also, as we are creating, you know, agency, you know, programs for fintechs and all of that, I think we should begin to look at how to repackage, rebrand agricultural sector so that it will become more attractive to the youth. And the truth is this, you know that for the last 5-10 years, even in the last 10 years, the only sector to me that has remained so resilient is the agricultural sector. In 2016, despite the economic recession, it still grew by 4%. And you know, 2020, agricultural sector stayed afloat. So the only savior seems to be the sector. So we actually need all the attention. We have to rebrand the sector for global competitiveness. Not just global competitiveness, we have to also meet domestic demand, because more than ever, every country, what is on top of government agenda is self-sufficiency in terms of food security, because global economic shocks now are becoming a recurring event.
It's a good way to leave it. An interesting conversation with you as usual. The investment analyst at AfriInvest Assets Limited, Mr. Temitope Omoshi. Thank you so much, and do enjoy the rest of your day. Thanks for your time.
Thank you for having me.
All right, then it's that time.